For many individuals, including myself, paying your rent or mortgage can be one of the most significant monthly expenses, and I know for me personally, mine definitely is. Now with this expense, it often leaves little to no room for saving or investing. However, what if there was a way to strategically select dividend paying ETFs that could literally cover your entire rent or mortgage on a monthly basis? Now in this video, we are going to explore 5 different monthly paying dividend ETFs that not only have a proven track record of consistent payouts, a solid basket of holdings, but also on top of that, the potential for long-term growth within. Now with this, we are also going to break down exactly how many shares of each of these ETFs in theory an investor will need to hold on to in order to have the dividends on a monthly basis cover your or I's entire rent or mortgage every single month. Now make sure to stick around, drop a like down below, and subscribe for more future content like this, and let's get into it. So first things first, we have to figure out exactly how much the average rent is in the United States, and according to rentcafe.com, it says that the average rent for an apartment in the US is around $1,702 per month, and of course this is going to change on whether you live in X, Y, or Z state, or an apartment or a house with a mortgage, etc. But let's just go off of $1,700 per month. So that's going to be the amount of money that we're going to try to receive in dividends on a monthly basis from these various ETFs. Now that brings us into the first high quality dividend ETF that pays a dividend on a monthly basis. The ETF we're talking about is DIVO, or the Amplified Enhanced Dividend Income ETF. Now the DIVO ETF has been around for 7 or 8 years, and its performance has been pretty decent. It's up 38.05% on the max time frame, and that's not even including dividends. So as far as the DIVO ETF's breakdown, it only holds around 30 or 40 different stocks on an ongoing basis, but these are high quality companies like United Health Group, Chevron, Visa, and so on and so forth. Now with this ETF, it buys a basket of holdings, but then also utilizes options and sells covered calls in order to generate a massive amount of income for investors, paid out in dividends on a monthly basis. Now the trailing 12-month dividend yield for DIVO is around 4.87%, and DIVO has paid out around $1.70 over the last 12 months. Now because DIVO pays out around 14 cents on a monthly basis, and remember we're going to need to get around $1,700 per month in order to have our entire rent or mortgage in theory to be covered completely by the dividend income. That means that we would take $1,702 divided by 14 cents, which is how much each share DIVO is going to pay on a monthly basis. Which means that in theory, we would need to purchase 12,157 shares of DIVO in order to have our rent completely covered. Now because DIVO ETF is currently trading at around $34.61, we would multiply that with how many shares we need, which means in theory, if we spend $420,000 on the DIVO ETF, the dividend itself could completely cover our rent. Now the next ETF that an investor in theory could buy into and allow the dividend to completely cover their rent or mortgage on a monthly basis is none other than the JP Morgan Equity Premium Income ETF known as JEPI. Now JEPI's performance has not been all that bad as well. It's only been around for a few years, and not with dividends included, it's up around 4.48% on the max time frame. Now JEPI, similar to DIVO and similar to pretty much all the ETFs we're going to go through in this video, is more of a covered call ETF, meaning that it buys into a large basket of holdings and then uses covered calls to generate more income on a monthly basis. Now JEPI's trailing 12-month dividend yield is much higher than that of DIVO at 9.98% trailing 12-month, and around $5 has been paid for every single share of JEPI over the last year. Now although JEPI ETF does not pay the same exact amount every single month, let's just go off of the last announced dividend of 34 cents per share per month. So if we divide $1,702 and divide it by 34 cents, we would need around 5,000 shares of JEPI in order to have our entire rent covered. Now JEPI currently costs around $53.52 per share, which means we would only have to invest around $267,000 in order to have JEPI's dividends cover our rent or mortgage on a monthly basis. Now the next ETF that you could do this with is none other than JEPQ, or the JP Morgan Nasdaq Equity Premium Income ETF. And this ETF without dividends included is actually down since inception around 3.78%. But year to date, JEPQ has had a crazy year, and side note, this ETF is definitely worth looking into. Now JEPQ has a very similar strategy as far as ETF strategy goes, just like JEPI, only this ETF has much more exposure to technology, which means this ETF has a little bit higher beta. Now JEPQ has paid out an 11.91% trailing 12-month dividend yield and around $5.53 over the last year as far as cash. Now JEPQ's last announced dividend was 45 cents per share per month, so if we take 1702 divided by 45 cents, we would need only 3,782 shares of JEPQ in order to have our entire rent covered. Now, if we multiply that by the current share price, we would need to invest in theory around $175,000 in order to have our rent completely covered on a monthly basis just from the JEPQ dividend. Now we are starting to get into some of the more fun stuff. This ETF is pretty crazy, the SVOL Simplified Volatility Premium ETF. Now this ETF has a strategy where it shorts the volatility index. And definitely check out my channel because I have made more in-depth videos. But SVOL in the max time frame is actually down 12.35%, but just 1 second, the dividends most likely should make up for it. SVOL offers a trailing 12-month dividend yield of 16.9% with $3.83 paid out in the last year, and this is for a $22 ETF. So back to the calculator, if we take $1,702 and divide it by 30 cents, which is how much SVOL pays out on a monthly basis, or somewhere around there, we are looking at 5,673 shares of SVOL, which are needed in order to completely cover our rent with a dividend income. And now if we multiply that by $22.31, we would need only $126,572 invested into the Simplified Volatility Premium ETF in order to have the dividends completely cover our rent. Now, last but not least, you guys knew I had to go there. The TSLY, the Yield Max Tesla Option Income Strategy ETF, which has been all the hype as of lately for good reason. Now this ETF is actually down quite a bit on the max time frame, not including dividends. Now this ETF is pretty interesting. It sells synthetic cover calls on Tesla stock in order to generate a massive amount of premium and then income to dividend investors on a monthly basis. Now TSLY has a 55.32% trailing 12-month dividend yield, and it's paid around $7.36 over the last year, and this is for a $13 ETF. So last but not least, if we take $1,702 divided by 58 cents, which is how much TSLY paid out last month, we would need in theory around 2,934 shares of TSLY, which cost around $13.13 per share. So an investor in theory would only need to invest $38,529 into this ETF as of right now in order to have their rent completely covered. Now, out of all the different ETFs we went through, of course, they all carry their own risk. And just because some of these dividends have paid out whatever dividends historically does not necessarily mean that they're going to do so in the future. But that being said, I think that we can all agree that our rent or a mortgage is one of the biggest bills across the board on a monthly basis. And how nice would it be to have a high quality dividend paying ETF to be able to cover the rent or mortgage payment on a monthly basis? But now I want to hear from you guys down below out of all the different dividend paying ETFs we went through in today's video. Which one is your absolute favorite? Let us know down below in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.